Hi everyone, welcome to my YouTube channel. My name is Tabitha, and today we're going to talk about what stock are we buying for capital gain account for the month of December, and how to calculate expected return. So if you're determining you're targeting to get a capital gain, so how do you calculate that? So that's what we're going to do today. Let's start by looking at agendas of today. So what is capital gain? Factors to consider when you're investing for capital gain. Account, move your money, stock to invest in, stock we are buying today, expected return, chart of the stock and the information. So all of these are things that we have already been talking about and we are familiar with them. So we'll just go through them very quickly. So number one is, what is capital gain? So this capital gain is, these are profit earned from selling capital asset such as stocks, bond, mutual fund, and real estate. So the next thing is factors to consider for a capital gain investing. So we have to look at the stocks that are more volatile. So if they're more volatile, and then they will be easy to move, we look at the stability of the stocks too. So if the stock is more stable, and then this will be easy to trade, and like you're not risking your money if you keep them for the long term. Historical performance shows us how these stocks perform in the past and what you should expect in the future. Fundamental analysis is when you look at the earning of the company. You also look at, yes, so fundamental analysis, you can look at earning per shares, and then also like income statement, all of those things that you have to check when you are looking at how stable the company is. So the next thing are the account. So when you're doing a capital gain investing, you can either use marginal or cash account. So this account will help you to leverage. So if you don't have money, you can leverage the broker's money. So you can use that one too. Another one is the TFSA account, which is like for people who are on the safer side. You just have your money that you want to invest. You can invest for the short term, long term, or medium term. And you do not want the gain that you get to be taxed by the government. So you use the TFSA. But if you're doing investing or trading regularly, and then you can use margin account or cash account. So the next thing would be how to move your money. I've been talking about this for a while. So you just use the debit card and choose instant deposit. Okay. So now let's go to the one that we invest in for capital gain. So this has to be like stocks, stocks that are growth stocks. So they move regularly. They do not pay that dividend because they have a huge promising growth. So they don't really move. They don't pay dividend much. So examples are like Amazon, Home Depot, and many others. So we also have individual stocks like BMO, Scotiabank, QQ is very expensive, but it also have a very huge volatility. VOO, SPYD. SPYD is on the slower side, so you don't have to use it for capital gain if you want. You can buy it for dividend. There's another one called VOO. So those things are the stock that you can easily invest in if you want to make. Other things are REITs. You can also use REITs to invest for capital gain, especially if you're doing the long-term one. So you can accumulate them and then later on you can make profit. Allied property is now really down and you can keep buying it and then later on it may go to the regular price that it normally trade in. stock for the month and expected return. So for this month, I have a capital. So this month I have a capital gain of 142, and I'm going to buy Walmart. So Walmart is 123.20. So $123 per share. So the number share that I'm going to buy is 142 divided by 123.20. So this only gives you one share. So let's go ahead and finish the calculation. The return now is, if you look at the 52 weeks high, it went to 134.69, and market price at this point is 123.20. Expected return would be now. So we are expecting that in the future, this could go to 134. So 134 is historical information that we have that we can use to reference and see what we can expect in the future. So we are expecting that if we buy at 123.20, we are expecting that we can make a profit of maybe 9% or something like that. So take 134.69 is not necessarily that it will be that exact. Sometime it could be more, sometime it could be less, or maybe you can decide to sell at 130 instead of 134. So minus 123.20 divided by 123.20 times 100. So now you get 9%. So your expected return is 9% for this investment. So you have one share of Walmart, and we are expecting it to go to one. We are buying it at 123, and we're expecting it to go to 134, maybe in 2 weeks' time, in 3 months' time, in 1 year time, depending on your target timing. So it's 9%. So let's look at the whole thing here. So this is the bid price and the hash price. So if you're buying it, you can buy at this one, hash price. If you look at here, we look at the 52 weeks high, which is 134.69. So this is how high it went, and this is how low it went in the past few weeks, or in the past weeks that we have been checking this. So there is also probability that it could drop to way low. So these are the information that really help you to make decision on why and why should you invest in this company. If this company goes back to 79 or even less than 60, will you really still hold on it, and why? Is it like really very stable company that you will not want to escape if the price is dropping too low? So those are the things that you have to use. So if you're buying so that is the chart for Walmart. And then if you're new to this channel, please subscribe for more videos, and I will appreciate your business.